Good evening, everyone. Glad to have you here with me. For those of you who don't know me, my name is Geny Marie, and I am a partner with Cecilia Segura, who is Realtor. I am a mortgage loan officer, and I have my NMLS degree, which is required by California law in order to process loans. I wanted to talk to you today about the loan process, but first I want to tell you what is the utmost question that everybody asks me. So let's just get this over with, okay? Everyone always asks me, is it a good time to buy a home? The loans, the interest rates are sky high. And I tell them, yes, it is a good time to buy a home. And the reason is because even though the rates are sky high, rates will always go down. And also because when rates go up, house inventory goes up as well. When interest rates go down, house inventory goes down as well. And when house inventory goes down, then these people, the people who can really buy, come out of the woodwork and they start bidding on, there might be like 20, 50 people looking at one house. And so you get a bidding war, and the seller might get 30 offers. We had one client who the winning bid was over $100,000 more than the asking price. Now, really. So right now is the best time to buy because there's houses all over the place, and probably in the city that you want, in the neighborhood that you want, and yet interest rates will go down, and I am here to help you to refinance, get the interest rate down, and save you hundreds and hundreds of dollars. Okay, so the answer to that all-time question, is it a good time to buy? Yes, it is a good time to buy. The time right now, November and December, is the best time to get a pre-qual. A pre-qual is to pre-qualify you for purchasing a loan. And the reason for that is because it does take a while to get everything ready. A lot of us don't even know what our credit is. We've never worked with a credit. We just get credit cards. You know, we bought a car. We don't know, I don't know what you have. You might not know what you have. You might have some incorrect information in your credit report that we don't know about. So there's a lot of pre-work that needs to go. So as far as talking about the loan process, the first step really is to meet with your loan officer. And usually I like to have Cecilia there, the realtor, so that she could talk also about the real estate portion of that process. Okay, so first we'll talk about that, and then also it's for you to meet me and to meet her and to see whether we do well together, whether you like us, whether we like you, whether you feel you can trust us. And by the way, we do work the hardest for our clients. I do not give up any loans. I don't care how hard they are. For me, there is always a solution. And I have closed, I would say 99.9% of all of my loans. So, and we are transparent. We will explain everything to the nth degree, and it doesn't matter how many times you ask me or you ask Cecilia the same question over and over until you understand. And you can ask us in different ways. We'll answer you in different ways. We want you to know what you are doing, because after all, purchasing your home is the largest purchase you will ever do in your life. All right, so the first step is really to meet with us. Okay, or give us a call. Maybe a friend of yours referred us to you. We work pretty much solely by referrals because we have our clients are really happy with us, and they will always refer to us to their friends, their family, their neighbor, their teacher, their boss. We get lots and lots of referrals, and of course, anyone who's in their own business, why you get referrals, right? So it's a good transparency, good job, and caring for your client, taking care of your client. So anyway, first is again to meet with us so that we can go over what it is that you want. What are you looking for in a house, in a location, and to explain to you what this process is, which we will do again. The second item is that we will be telling you the documents that you need to bring to us. We will also give documents to you. So there's an exchange of documentation, some that you need to fill out and give to us, and some that we need to fill out and give to you. There's an online application, which is really basically for my broker, so that he has he needs to do statistics for the government. I mean, there's so many laws after that, the big crash of 2008. So there's many new rules, many new laws that we have to abide with. So there's applications that we will give you to fill out, and they're very simple because this is all very, very preliminary. And there is documentation that we will request from you. We will pull your credit report, and then we will also send for other verifications of your financial status. For example, we will send for a verification of employment. We may will ask you for bank statements, pay stubs, driver's license, or different IDs, a myriad of documentation. So don't be afraid of that. Just so that you know, I always consider getting a loan or working a loan is like building a 1,000-piece puzzle upside down, so that you can't see the picture, but you just see the little gray pieces, and you're putting them all together. So I'm mostly a project manager, managing all the different areas of the loan process. Okay, the third part is gathering all of this information, and then for me to analyze everything and meet with you again to go over the information, make sure that we have everything right, and make sure that we have everything that we need. All right. And so once we do that, then my processor will put all the documentation together, and we will come up with pre-qualification for you. At this point, we'll give you a free, a good faith estimate, so that you will know at what price points you can purchase, what your interest rates would be, and what your payments would be as a total. And we give you choices so that you know what it is that you're looking for. And once you've pre-qualified and you made the decision of what kind of price range you are looking for within your pre-qual rates, then I will give certain documentation to Cecilia and give her the go-ahead to show you homes. I do not let any realtor show any homes to clients until they're pre-qualified. So I give them, for example, a pre-qual letter of approval, and I give them another document that is called a DU, or actually desktop underwriting, which is from a web application that will kind of go through all of your financial information on the web and analyze it all by a computer, and also spit out a different approval. So Cecilia needs those two in addition to other documentation that she will be requesting from you in order to show you homes and put in offers. Now, once you have an offer approved, then I will be given the assigned contract, because you will have a contract between the seller and yourself. And then once I have the contract with me, then all the documentation that I have ready from your pre-qual and the contract, I will be submitting to the lender for their approval. Now, the approval process will probably take with the lender, depending on how busy they are, anywhere between 1 to 5 days. And 5 days is really pushing it, you know, as the length of time, but it's more between maybe, you know, 2 to 3 days. So once we get that, what it's called, it's not really a total approval, it's called a conditional approval. And what that means is that you are approved for the loan based on conditions that the lender is requesting. And the conditions that they request is usually more paperwork, more fun for you. So then I will be letting you know what more documentation I need from you. First of all, every lender will always want the most current pay stubs and the most current bank statements. And the bank statements are always the last 2 months, and I always ask for the last 2 months of pay stubs as well. So I always tell my clients to open up a little folder, and every time you get a pay stub or you get a bank statement, just shove it in there so that when I ask you for one, you're not looking through the glove compartment or, you know, under the sofa or somewhere like that, you know, to be able to find it, to give it to me. And so I give all of that information to the lender, and then their underwriters go through all the documents. So there are various stages of underwriting in any lending corporation. I do not work with banks that are out on the street like Bank of America, Chase, Citibank, Wells Fargo, like those. I work with lending companies who solely do mortgage loans. So they will, you know, one level of underwriter will look at your paperwork, and then they send it out to another level of underwriting, and then possibly a third. And at each level, they will send back and say, well, this looks good, and this looks good, and this looks good, but we need more about this. So then I have to come back to you, and we go through another round of approval, right? And every time we go through a round of approval, the lender has 24 to 72 hours to look at the paperwork and approve or request some more. So once that all of those approval roundabouts are finished, then the lender will give me their final approval. Once their final approval is given, then it is time for the lender to complete the loan documents. So everything before, from day one when you came to see me to when I get the last loan approval, is all just really preliminary, and it doesn't bind you to anything at all. But once we get loan documents, then we have title company make an appointment with you and a notary to go to your home to sign those loan documents. So this is the official application and loan signing. You will need to bring certain documentation to that, like your IDs, your passport, um, your driver's license, and just to make sure that it's you, and the notaries have things that they need to sign. But anyway, you will sign all those in, wet signatures, what they call it. So once you sign all of that documentation, you also will give a check to the to the notary public for the total amount that has come out from the title company as to what it's costing you completely to purchase that house, which means down payment, closing costs, prepaid items, and anything else that comes up. That will be part of another capsule, because it can get quite boring and tiring and quite specific. So I'll do another set on that one, okay? But you will have a check, or better, a wire. Check really is not the best way to give it to the notary public. It's better to wire the money to the lender, because the money is really not considered at the title company until the check clears. So a wire is a lot faster for you. So once the title company gets the wire, and then they get the documents that you sign back from the notary, then the notary sends it back to the title company. Title company does whatever they need to do, that they do, and then they send it back to the lender. The lender will review it one more time, just to make sure that all the I's are dotted and all the T's are crossed. And once they're happy, then they say, okay, good to go. So what they do is, the next step is called funding. And what that means is that the lending company will fund the house, and send the money for the house, for your loan, to the title company, so that the title company can pay the seller. All right. So that's what's called funding. So the lender sends the money to title company. Title will pay the seller, and if there's any money left over, then they send it back to you. So the next day, or maybe 2 days later, depending on the volume of work that every single department needs to have, you would have your house recorded in your name at the county registrar. And so it would be recorded, for example, if you live in Concord, it would be recorded at the Martinez Hall of Records. So it'll be recorded as, the property owners are you. So that would mean then you are now finally a homeowner. And that is the time when you will get the key from Cecilia, and you are now officially a homeowner. So again, it's a process which really takes the actual loan process from when you sign the contract of a house to when you own the home is about 30 days, maybe 35 days at the most. But starting to buy a house, it could be 5 months before, it could be 6 months before, because you might not be ready. There might be things that you need to fix before you can even start to look for a home. So remember, use November, use December to start, thinking about getting pre-qual. And I think next year's rates are going to go down. Remember, we're just getting out of a pandemic, and the pandemic, what it did was reduce the interest rates to a level that has never before been seen in history. So it was not real. It just was not real. And so, and it threw the whole world into economic turmoil. But and we've seen a lot of inflation now that we're coming out of the pandemic. So because of this inflation, the government has had to do things to get us to make corrections. So that's why they've raised the interest rate so high, and that's why other things went so high. I mean, you saw gas was almost $7 on a gallon. Milk, vegetables, food, just about everything went up, and the government had to do something to inflate. So the houses also went up higher as well, and that's unreal as well. So having the government raise interest rates, the home industry is kind of a gauge of the economic situation of a country. So that's why they raise the interest rates. So it kind of pushes everything down, and as you've seen already, things are going down. So house prices are not losing value. This is just correcting something that was not real and something that was caused by a pandemic, which we haven't had for about 100 years. So it's a correction. It's not a crash. It's not a bubble. So like I said, the best time is now to get a pre-qualification and start, being able to purchase your house next year. So by next year, you can be a homeowner. So it would be yay for 2023. That would be your one thing that you want to do next year. Number 1 on your list, buy a home. Okay, so thank you for joining me, and we will talk again soon.